Welcome to the Moss Adams webinar, Increase Customer Confidence with an Improved SOC Examination. Before we get started, we have a brief housekeeping video that will improve your participation in today's session.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Here today to help us better understand system and organization controls is Mark Hurst. Mark provides SOC audits for a variety of complex service organizations where his audit experience helps companies manage the controls of their vendors and third parties, ensure the privacy and security of data used by and transmitted between their business applications, and oversee the ongoing integrity of general computer controls and security. Joining Mark today is Raveen Bhasin. As a leader in Moss Adams' IT risk and compliance practice, Raveen focuses on IT risk and internal controls that help businesses have confidence in their security, transactional, and cybersecurity practices. Through highly technical SOC 1, 2, and 3 audits, he helps service and sub-service providers align their internal controls with that of their valued customers. We welcome Mark and Raveen. Mark, I'll turn things over to you and Raveen to get started.
Thank you, Tanya. Given that SOC reporting is a broad and technical subject, Mark and I will try our best to cover the most important concepts in the next 50 minutes or so. We're hoping that by the end of this webinar, you're able to walk away armed with some key information about the types of SOC reports out there, that you're able to identify which SOC report or reports are relevant to you and your organization, that you would have a handle on what it takes to be prepared for an SOC examination, and would have some insights into when it makes sense to engage with an external party to assist with that readiness assessment. In terms of our agenda, I will be covering the differences between the various SOC reports. Mark will cover the latest SOC standards from the AICPA, which I might add have undergone a dramatic change in the recent past. And I will wrap up by covering some additional considerations that are especially relevant for service organizations that are looking to maximize or build upon their existing compliance and attestation efforts. So right off the bat, we're going to start off with a couple of polling questions. The first couple of polling questions will allow Mark and I to learn more about you and your level of exposure to SOC reporting, which in turn allows us to tailor our delivery so that you can get the most out of this webinar. So the first question that we have on your screen is on a scale of 1 to 7, and yes, we wanted to keep it different than 1 to 10. How familiar are you with SOC reporting? 1 being I wear socks every morning, and I'm hoping that that constitutes most of us. 2 being we've begun receiving requests for SOC audit reports and need to know more. 3 being I understand the basics of SOC reporting, but need to understand the details, the benefits, and the impact to my organization. 4, we're in the market for an SOC audit, but want to know more information on the next steps and how to prepare before we move ahead. 5, we have an SOC report for periods ending prior to December 15th, 2018, which is when that dramatic change in our standards happened. 6, we are committed to having SOC audits and to use them to help protect ourselves and our customers. And 7 being expert level, I have actually contributed to the AICPA guidance on SOCs, and if that is true, then that's fantastic. So I'll give everybody a few seconds to pick one of those 7 answers. All right, just as a reminder, please go ahead and hit that submit button before I flip over to the results slide. I want to make sure that everybody does get credit for their CPE. So I'm going to go ahead and flip over to the results, and it appears 21.9% of us wear socks every morning, which is great. Great to know that. A majority of us, 38.5 of them, understand the basics of SOC reporting, but want to understand the details, the benefits, and the impact to the organization, which is great, and we hope to leave you all with that information. So it sounds like there's a good mix here, but a lot of folks want to learn, from an internal perspective, want to learn the impact and the benefits of SOC reporting. We'll move on quickly onto our second polling question here. What is your preferred takeaway from today's webinar? Oh, actually, I think it jumped a few slides, so I'm going to scoot back here a little bit. All right, what is your preferred takeaway from today's webinar? Learn the basics of SOC reporting before my company embarks on this journey. I am a member of an independent assessor firm, much like Moss Adams, trying to learn more about SOC methodology. I'm a part of a service organization with an existing report, and I'm just here to compare approaches between my existing assessor and Moss Adams. Or the fourth option being, I'm primarily here to earn CPE. Again, I will give y'all some time to pick the correct answer and hit submit. All right, I hope everybody's had a chance to pick one answer and hit submit, and so I'm going to actually flip over to the results slide. So 41% nearly of us want to learn the basics of SOC reporting before the company embarks on this journey, which is great. The second maximum went to folks here to learn and earn CPE, which is also great. And then we have 12.2% of us who are here from a service organization with an existing report and just comparing approaches, which welcome. And then 8.2% of us are here because they're part of another assessor firm, much like Moss Adams, and are here to learn about our methodology. So great. That helps us kind of gauge where our audience is and will help shape the rest of this webinar. All right. So let's talk about SOC reporting and the various SOC reports and the types of SOC reports. And I know the names can get kind of confusing because there's a lot of numbers that kind of overlap. So let's try and demystify this a little bit. On your screen, you'll see a slide that kind of helps break this down. There are 3 different kinds of SOC reports, and I want you to notice that I said kinds of SOC reports and not types, and why I chose that word would become clearer as we proceed. So starting off with SOC 1, This is a report that covers internal controls over financial reporting, also known as ICFRs. It is typically used by the financial auditors or the controller's office of your customers, if you are the service provider in this situation. This type of report is typically used for financial statement audits. So if you were to think of a payroll processor, and I'll let you think of your favorite big, famous, three-lettered name payroll processor, and I'm not going to mention them, but if you're a payroll processor and you're conducting financially significant transactions on behalf of your customers, aka processing their payrolls and their benefits, the auditors of the customers would expect to see a SOC 1 report so they would feel comfortable that the payroll processor has appropriate internal controls over financial reporting, guaranteeing that that information is being processed accurately. Contrasting this with the SOC 2, these reports are focused primarily on security controls at the service organization. The service organization also has the ability to tack on one or more of the following additional criteria relating to availability, processing integrity, confidentiality, and privacy. This type of report is utilized by the vendor management office, risk management office, the compliance officer at the service organization's customer. And this is typically in lieu of lengthy vendor questionnaires or distracting on-site procedures, as many of you already might have been subject to in the past. So I'll let you think of a large three-lettered cloud service provider, and as a user of that service, you would absolutely want to know that there are appropriate controls in place to ensure the security of the data that you've entrusted them to host. Perhaps you are hosting a web service with them, and you would want to know that the web service is going to be available when you need it most at critical junctures within your business process. That's the type of stuff SOC 2 reports try and cover. SOC 3 reports, unlike the first two, are general distribution reports. What that means is a SOC 3 report is a summary report, unlike the first two. The first two, SOC 1 and SOC 2s, may contain a treasure trove of data around your processes, your controls, your control failures, the kind of data you don't want exposed to the public. You definitely don't want to expose it to your competitors, and don't want to hand those key critical pieces of information to hackers either. A SOC 3 is essentially a public distribution summary version that excludes those critical details and is often used as a marketing tool or is posted on your public-facing website so prospects can see it and feel more confident proceeding engaging you. And now as to the reason why I used the word kind of SOC report and not type of SOC report in the last slide. Well, because there's two types of SOC reports. A Type 1 report is a point-in-time test that consists of an examination of configurations, policies, and procedures behind your internal controls. It's used to determine whether the tested controls were designed appropriately as of a particular date. The controls just need to be in place as of a day for a Type 1 report, and this is called a test of design report. A Type 2 report, on the other hand, consists of the same test of design as a Type 1, but also includes a test of effectiveness. A test of effectiveness is an examination of the operating effectiveness of internal controls over a duration of time called an examination period. So hypothetically speaking, let's assume you have a report that has a 12-month examination period. We, as your assessors, would come and perform a look back over the last 12 months of activity and determine whether the controls operated as they were designed for the duration of that period. That is the test of effectiveness. So for a Type 2 report, just to kind of reiterate, we perform both a test of design and a test of effectiveness. So, in a nutshell, there's two major kinds of SOC reports, each with two types of reports. The key takeaway from this infographic on your screen is if you're conducting transactions or processing financially material and relevant data, then you would typically seek out a SOC 1 report and then pick whether you want a Type 1 or a Type 2. If you're trying to offer your customers confidence that your security controls or availability controls or other criteria controls that I'd mentioned are effective and the data they have entrusted you with is safe, then you would seek a SOC 2. There are many instances, however, where both a SOC 1 and a SOC 2 might be relevant. We have numerous clients that actually do require both for various reasons. All right, so with that, I'm going to actually jump into our third polling question, just to make sure that you guys are paying attention and have a grasp on the previously discussed concepts. So, which SOC report would you recommend for an Infrastructure as a Service, or IaaS, provider? A SOC 1 report, a report that will be used by customers and their auditors to plan or perform an audit of their financial statements. A SOC 2 report, the report that will be used by customers and or stakeholders to gain confidence and place trust in the security of systems. Or SOC 3 report, the report that is made generally available and is used as the marketing tool. I'm going to give you a few seconds to pick one of the three answers on your screen and hit submit, and we will see what the results are. All right, so hopefully everybody's had a chance to pick one of those three answers and hit submit as we move on to the next slide to look at the results. Great. So 69% of us have the right answer, or the intended answer, which was a SOC 2 report. Typically, as an infrastructure as a service provider, your biggest concern for your customers is to ensure that they have confidence and trust in the security of your systems. A SOC 1 report, which is what 20% of y'all picked, would typically be focused on transaction processing, which is typically not under the purview of an infrastructure as a service provider. And a SOC 3 report might be beneficial for an IaaS provider, but typically is only paired with a SOC 2. So with that, I'm going to hand it off to Mark to walk us through the next section of our webinar.
Thanks, Raveen. Next, we're going to talk about the structure and contents of SOC 1 and SOC 2 reports. And there's basically four sections of either one of these reports. The first section is called the Service Auditor's Opinion. And this is basically a form, or a kind of a letter that is written by the service auditor, and it states whether or not the service auditor found exceptions or didn't. The goal is to get a unqualified report. If there are exceptions and enough to basically impact the completion of a control objective, that is called a qualification. So that would be a qualified report. But that's this first section, is the service auditor's opinion. The second section of the report is usually a combination of management's assertion letter, the service organization's description of the system, or oftentimes the narrative, and the complementary user entity controls. So that's the second section, and that section is the service organization's responsibility to write and to create. The third section of the report is the service auditor's section of the report, and this is basically a table that lists out what the control objectives are if it's a SOC 1, or the trust services criteria if it's a SOC 2 report, the related control activities, and the results of the testing of those control activities. The fourth section of the report is an other section of the other information. It's oftentimes called other information. And this is where the service auditor can relay additional information that's not going to be in scope or purview of the service auditor's opinion. Basically, the service auditor will not opine on that. A typically like a disaster recovery plan or description of that will be included in this other information section. So we're going to talk a little bit about each of these sections of the report. We're going to start off with management's written assertion. Management's written assertion basically is a statement by management saying that the narrative is a fair presentation and description of the system. It's stating that the design of the controls are suitable and that verification of those controls and how they operate and how they're designed are effective or if there's an issue, then they will state that in there as well. The operating effectiveness, if it's a Type 2 report, they will assert the operating effectiveness for a Type 2 report. And if there are any changes within the system during the period, then they would state those changes in that assertion as well. So the next area that we're going to talk about is the service organization's description of the system. This is, again, just a written narrative by the service auditor of the internal processes and related controls and the control environment. It includes the services provided, a description of entity-level controls, and there's typically 4 areas that are covered: the control environment, the risk assessment processes, any monitoring activities that they do. This could be security monitoring or other types of monitoring, and then information and communication processes. This is basically how the service entity, service organization communicates internally and externally. It also includes the procedures by which the services are provided, those processes, significant events or other transactions that have occurred during the period, report preparation processes, the control objectives and related control activities. Usually that's embedded within process description, and then any complementary user entity controls that are in place. We're going to talk a little bit more about that here in the next few slides, and a description of any of the subservice providers' controls that may be utilized by the service organization. So next we're going to talk about this concept of complementary user entity controls. Complementary user entity controls, often referred to as CUECs, they're controls which the service organization assumes will be in place at user entities. So to give you a good example, let's assume you give your customers the ability to add new users to a system. And those customers they're oftentimes called user of the system. Those customers' employees, let's say they terminate. Well, the service organization can't be responsible for removing that user ID because they don't know about the termination unless that user tells them. So this is an example of where a user of the report or complementary user entity would be responsible for the operation of internal control. So basically, CUECs, they identify roles, responsibilities, and obligations of the user entity to ensure achievement of the control objective identified in the report. These are oftentimes referred to as user organization controls or complementary customer controls. Those are other terms that are used to define CUECs. Next, we're going to talk about this third section of the report. This is that table that I mentioned earlier that contains the control objectives, the control activities, and the tests that are performed by the service auditor. Basically, what you have is a table. The first column is control objectives. If it's a SOC 1 report, if it's a SOC 2 report, it'll have the trust services criteria. Then the next column will be the related control activities that help the organization achieve that objective. The third column are the test procedures that are performed by the service auditor, what they do to get comfortable with the operating effectiveness of those controls. Then there's the next two columns are basically if any exceptions are noted while the service auditor is testing, that is noted. And then if there's an exception, then there's a place for management to respond to help explain if there's a special circumstance or additional procedures that they're performing going forward so that exception won't occur again. So anyhow, the way this works is the service organization, they define risk to their clients, and so they come up with things that they do to mitigate those risks. Those are called control objectives, or in the case of a SOC 2 report, they're the trust services criteria. And then the things that you do to achieve the control objectives or the criteria are called internal controls. So those are things you do to achieve the control objective are the criteria. So the next area, or next concept we're going to talk about is subservice providers. Let me give you an example. Let's assume a service organization provides online banking, an online banking application, and that's the services that they provide. It'd be a software as a service, and this software as a service is hosted in a third-party data center. The data center is known as a subservice provider. So that data center would be responsible for things such as power, telecommunications connections, network connectivity, all kinds of things. And so that's the definition of subservice organization. The AICPA defines a subservice organization as a service organization used by another service organization to perform some of the services provided to user entities that are likely to be relevant to those user entities' internal control over financial reporting. Basically, it's a third-party processor. So next concept we're going to talk about, and it's related to a subservice organization, two concepts known as carve-out versus inclusive. So if we're using the data center example that I shared earlier, the carve-out method would say that those controls that the data center is responsible for will not be included or in scope of the report. And so it would be up to the reader to go out and oftentimes obtain that SOC report from the subservice organization and read it and determine whether or not there's exceptions within that report that will impact their control environment. Now, conversely, the opposite of that is called the inclusive method. The inclusive method, the service auditor must go out to the data center and actually test controls at that data center as if they were part of the subservice organization. And so there's additional effort when you do the inclusive method for subservice organizations, and the norm is typically the carve-out. So that's typically what these reports are, how they handle that. Data center will be responsible, as I mentioned earlier, for like physical access control, environmental controls, electricity, fire suppression, air conditioning, etc. So those would be the subservice organization controls. So the next concept is, and this is a new concept, it's called complementary subservice organization controls, are known as CSOC. And these are those controls that I just mentioned, the environmental control and the physical access controls that the subservice provider is responsible for. It's basically controls that management of the service organization assumes in the design of the service organization systems. Will they be implemented by the service organization and are necessary to achieve the control objective stated in management's description of the service. So we're going to move on to our next polling question, and it is, how would you categorize your business? One, a service organization providing services to customers and other entities, or two, a subservice organization that provides critical services to other organizations, service organizations, three, an independent assessor, or four, none of the above, other or not applicable. Okay, so now we'll look at the polling results. and it looks like we're about kind of 50-50 split. Service organization providing services to customers and other entities. So we have a bunch of folks that are part of service organizations, and then we've got a couple that are service organizations that provide critical services to other service organizations. Have an independent assessor, a few of them on the line, and then about 43% none of the above. So we have a good mix out there. So now we're going to move into readiness assessment. And basically, we've talked about the different elements of the report. We're going to talk about how do you prepare for your initial SOC report. So readiness assessment is what you do typically. Management can choose to perform a guided readiness assessment for either one of the SOC 1 or SOC 2 reports. Many times, service organizations will engage the actual firm that's going to perform the ongoing audit to perform the readiness assessment. The assessment is designed to help really identify the control objectives for a SOC 1 report. That's not necessary for a SOC 2 report because the criteria is prescriptive from the AICPA, so you don't have to go through that for a SOC 2 report. However, for SOC 2 reports, during the readiness assessment, the service auditor, the firm that helps you go through this, will help guide you through what principles are relevant to the services that are being provided. There's 5 of these principles. There's security, which is the core, the foundation of the report. There's availability, processing integrity, confidentiality, and privacy. And so depending on the services that are providing, confidentiality or privacy may or may not be relevant. And so those are some of the things that you would hope to get out of your readiness assessment. So what happens is that the team will come in and you'll identify who your business process owners are, and you will walk through basically your business processes. And through that process, the assessor will identify, what controls are in place and what controls are not in place. Once the internal controls listing is developed, are identified, then those controls are mapped to the control objectives for a SOC 1 report or the trust services criteria for a SOC 2 report. So basically, there's once you identify these internal controls, are during this process, a gap analysis is performed. And so I like to say there's basically 3 dispositions. Number 1, the controls in place, and it looks like it's working properly. The second is controls are kind of in place. I mean, the controls in flight maybe it's not 100% there, or perhaps not 100% documented, but it's kind of in place. And then you have the third disposition, whereas the controls aren't even in place. They're completely missing, and we call that a gap. And so once we've gone through that process, or the service auditor goes through that process, and the gaps are identified, then you have to design what are new controls basically to fill those gaps. And so that's a collaborative effort between management and the service auditor to help come up with those new controls that need to be put in place. It's management's responsibilities. So once those are identified, management then will go off and remediate those gaps. And after a period of time, once they're remediated, then the next step is basically planning for the formal audit going forward. So the process looks like this. Now this is the process for the formal audit. The first is you prep for the audit. Things that you do to prep is, you plan. You want to make sure those controls are locked and you have a draft of the report. You define your schedule, and and then you submit what's called a documentation request listing, or a PBC listing provided by client listing. The next step is performing the audit. Oftentimes this is called field work or testing. What happens is the service auditor will perform inquiries. They will inspect and observe things that are in place. They will test samples, and then at the end of this, they'll conclude on their testing. The last step of the process is basically conclude the audit. I call it a reporting, but this is where the report's finalized. It goes through a quality assurance process at the accounting firm. We obtain client sign-offs on the report, the draft report, and at the very end of the process, we will sit down, or the service auditor firm should sit down with the client and debrief and talk about lessons learned or how to be more efficient and effective the next round. So I'm going to go a little more depth in each of these areas. The first area was planning, and during planning, you have a planning meeting with the management team of the service organization, and you kick off the initiative. You agree upon what the communication protocols are. This will include things such as status reporting. Are you going to do that weekly, every other week, or how often do you want to have that? You also take another look at the risk and controls matrix, or the control and internal controls matrix, and if there's any refinement, this is the time that you would do that. So the next phase of the project is field work or testing. And basically the service auditor comes out and will be on site for several days to do this. And so there's basically 4 types of testing that a service auditor will perform. The first is inquiry testing. That's basically asking the business process owner or the control owner, how does this work? Or tell me, if this happened or whatever. The second is observation. That's the service auditor observing a function as it's being performed. The third is inspection. That's where the service auditor inspects evidence or artifacts and comes to a conclusion on whether or not the internal control is working properly. And the fourth is reperformance. As we build on these, 1 through 4, the stronger tests are inspection and reperformance. So during field work, the first step is to identify who the key business process owners are. You schedule the field work. You will provide the PBC listing or DRL listing. These are the request list for evidence. The service auditor will then request for certain controls populations, and there's this concept that's out there called completeness and accuracy. And this is where the service auditor has to get comfortable that the total populations that are being provided to them, are they accurate? I mean, did the service auditor delete records out of there or kind of tailor it up to, so it would be a favorable view of the service organization? The service auditor will go through and test. They may have some follow-up questions. They may ask for additional evidence or observe a few things. If there are exceptions noted during this phase, then this is where management would respond to those exceptions. And then at the end of this is where the draft of the system narrative is also provided back to the service organization to review and provide updates. So the last area of the reporting process is conclude or audit. I also refer to this as reporting. This is where, again, the draft of the SOC report is reviewed by management. We obtain final feedback. We address any quality review comments. This is for all accounting firms, the professional standards require there's a quality assurance process that's followed. And so what this means is a concurring reviewer will look at the report from the firm. there are sign-offs, and there are basically 3 different documents that management at the service organization provides back to the service auditor. The first being that management assertion letter that I mentioned earlier. That's part of the report. There's a representation letter, basically where management represents that all of the information that was provided to the service auditor was complete and accurate and reflective of their environment. And then the last, or the third thing, is something called subsequent events. These are things that have happened since the end of the reporting period and the time the report is actually issued. So it's that time after the end of the reporting period, to issuance of the report. If something has occurred during that time frame that would influence or change the service auditor's opinion, then this is where the management's asserting that nothing has occurred. Examples of those, let's say some type of fraud occurred after the reporting period, then the service auditor would want to know that because it could impact their opinion. Or if there's some type of issue or security incident that occurred, the service auditor would want to know that, and that's the opportunity for management to provide that. And then there's an exit meeting. The exit meeting is basically lessons learned or opportunities for improvement going forward. So now we're going to talk about kind of timing on all of this and how long it takes. So the first phase of this is scope and planning. Typically takes about a week and it's done remote. The readiness assessment typically takes 2 or 3 days on site for the service auditor, but if you add in there the time it takes to remediate gaps, internal control gaps and all that, what we find is typically about 3 or 4 months is the sweet spot in order for a service organization to remediate all those gaps. For type 1 report, this report is a point in time, as Raveen mentioned earlier. It takes typically around 60 to 90 days after the completion of the field work. And then for the actual type 2 report, which is the report that covers a period of time, it's typically 6 to 12 months, the same amount of time it takes to issue that report, 60 to 90 days. Now, if it's the first time through, it's going to be toward the end of that time frame. If it's the second or third iteration of the report, it could be closer to 45 days as far as issuing the report after the end of the reporting period. So that's what I have. Raveen is now going to talk a little bit about some additional considerations for SOC reporting.
Thank you, Mark. And this is where, as we promised at the onset, we will spend some time discussing some of the additional considerations, especially relevant for organizations that have existing compliance programs, already have an SOC report or other attestation reports, and they're working on or want to add additional coverage to either set them apart from their competitors or because their customers or regulators have expressed their desire to see more. And so that said, the first one that we're going to cover is HITRUST. So SOC 2 plus HITRUST. HITRUST is a common security framework based on the ISO 27001, 27002, and the NIST 800 series. This is an extensible and flexible framework that allows enterprises and organizations to test once and demonstrate coverage over a wide variety of security, privacy, and regulatory frameworks, including the latest ones that everybody is talking about, including GDPR. Since it started with a healthcare focus, HITRUST also includes HIPAA security. So if your organization has BAAs in place or is subject to HIPAA, HITRUST is a great framework to target from that perspective as well. The benefit of coupling your SOC 2 Type 2 with a HITRUST engagement is that you can test once and essentially issue 3 reports from that one round of testing. You would be, as the name entails, issuing a SOC 2 Type 2 report, but along with that, you would be issuing a validated HITRUST CSF report that demonstrates compliance with the HITRUST criteria and any additional regulatory compliance criteria that you might select within that. Along with those two reports, you would also be issuing a NIST Cybersecurity Framework Report, also known more popularly as the NIST CSF. A critical point to be noted here is that HITRUST is the only body that issues a NIST CSF report, which can be a critical factor for healthcare, financial, infrastructure, oil and gas, and other industries where cybersecurity is a major consideration at the audit committee or board levels. Another point to note here is that while SOC 2 Type 2 reports follow a typical annual cadence, the HITRUST report is valid for 2 years and therefore follows a biannual issuance cadence. Although there are some requirements in place for HITRUST reports to have interim testing done during the non-reporting years, so you'd have some procedures to perform in those off years. Another additional consideration that we want to talk about is SOC for Cyber. In response to increased scrutiny around cybersecurity from both regulators and audit committees, the AICPA created a reporting framework, much similar to their existing SOC reporting framework, that allow organizations to report on the state of their cybersecurity risk management program. This allows a consistent standard to be used to describe and assert to the effectiveness of and report on cybersecurity programs across industries and across verticals. However, there are some key differences between a SOC for Cyber versus a SOC 2 that go beyond just the subject matter in question. For starters, the SOC for Cyber security framework allows management to choose from a few different pre-existing controls criteria from industry-recognized frameworks, such as the NIST CSF, which happens to be by far the most popular one, ISO 27001, 27002, and HITRUST. SOC for Cyber, unlike a SOC 2, isn't aimed solely at service organizations and can in fact be used as a general purpose report for unrestricted distribution, similar to a SOC 3, which means you can actually use it for marketing purposes and demonstrate to your prospects that you've got more controls built around cybersecurity than perhaps other competitors in the marketplace, which is a key differentiating factor in the marketplace right now. And those were the additional considerations we wanted to talk through. As we start wrapping up our webinar here, I want to leave you with a few pointers that you can use as you're going through the process. As a lot of you indicated, you're going through the process of either starting off your SOC process and selecting an assessor firm and testing it. And so one of the things that we want to leave you with are some pointers on how to pick your next assessor firm. What to look for in your next SOC examiner. The process, as Mark described, is heavily influenced by who you have partnering with you throughout this journey. So it's important that you ask your examiner some important questions and engage their familiarity with the latest standards. You examine and understand their technical skills, their industry certifications and exposure. You also want to make sure your examiners have familiarity with the latest development methodologies, are familiar with the latest tools that are used in software development and the latest SDLC trends out there, and can actually communicate effectively with technical resources on your team without having to use a translator. Another aspect to consider is a strong business acumen and just familiarity with different business processes. SOC reports typically, at least on the SOC 2 side, always look at the same criteria, but the environment within which those criteria need to fit differs from company to company, and so a broad exposure from your examiner's perspective or your assessor's perspective goes a long way in making the process painless. And the final part being strong communication skills. A collaborative and consultative approach are key differentiators between different assessor firms, and so be on the lookout for their approach and how they come across and the types of artifacts they provide from a status reporting perspective, from an ongoing project management perspective. Key takeaways, there are 3 types of SOC reports as we covered. The type of a report is based on the business need and what your customers are asking for. There are multiple sections to each report with stringent requirements that must be followed to make the report both valid and useful. SOC reports can be a valuable tool to help service organizations increase their customer confidence on their internal controls. With the increase in data privacy, business owners must expect to be held accountable as data stewards, and so therefore a SOC report helps you demonstrate that. And the final piece being the information technology experience of an audit professional is critical in understanding and ensuring that an IT control assessment goes successfully. So be sure to ask your examiner and assessor those types of questions. And with that said, I'm going to open it up to the audience for any questions that might have been asked during the webinar.
Thank you so much, Raveen, and thank you, Mark. So this concludes the educational portion of our presentation, and we did receive a few questions through the Q&A. So with reference to, let's see, so the question is, do all these SOC fall under SSAE 18? And just for a reference for the two of you, this came with when you were covering the information on SOC 1, SOC 2, and SOC 3 on our chart.
Okay. Yeah, it gets a little confusing because the AICPA has renamed these things over a period of time. Basically, a SOC 1 is also known as a SSAE 18. That's the latest and greatest. If you go back, I don't know, 10 years ago, these used to be called SAS 70 reports, and then the new standard that came out was called SSAE 16, and now SSAE 18. Those are the SOC 1 reports. Their focus is on internal control as it relates to financial reporting for the service auditor's clients. The other is known as the SOC 2 report, and that's more compliance and operational focused. The latest guidance that came out encourages the service auditors and the firms out there, and actually service providers as well, to begin using the term SOC 1, SOC 2, and SOC 3, and not necessarily refer to these things as SSAE 18s because of the overlapping terms. It's been making it a little bit confusing.
Yeah, and to add to what Mark said, historically, a SOC 2 and a SOC 1 were governed by different standards, SSAE 18 being the standard underlying the report. And so the report you're issuing is a SOC 1 report, a SOC 2 report, a SOC 3 report. You're not issuing the standard, therefore you'd never refer to it as an SSAE 18 report. It's a report that's based on that standard. Historically, there used to be differing standards in SOC 1s and SOC 2s. Those under SSAE 18 have actually been combined into a singular standard, and therefore you just refer to them as SOC 1, SOC 2, or SOC 3 reports. And any reports issued past December 15, 2018 from a SOC 2 perspective would have to be under the new trust service criteria, which would then also be compliant with SSAE 18. So hopefully that answers the question.
I think so, and which kind of leads into the next question. It says, for new vendors, would you request a SOC 2 report? Typically, how big would a vendor have to be to have these reports?
So with regards to requiring SOC 2 reports, we have seen a wide variety of clients and customers out there that have come to us or have come to other assessors looking for SOC 2 reports because their customers and their clients want these. These have ranged all the way from startups with 6 people, 7 people startups, all the way to very large corporations that are in the Fortune hundreds as well. And so really you don't have a minimum critical size. It's very based on the risk profile of the service that you're providing. If you're providing a service that is critical, that includes a lot of data, and there's a lot of perceived risk with your service, then it would make sense, even for your smaller vendors, to start providing you SOC reports. Whereas the service, if they're providing a service that isn't very critical, doesn't have a lot of data security or transactional implications, that perhaps we wait on those. Mark, do you have?
Yeah, this is my insight on that. Is it's really what's driving the report. And so if I'm a service auditor and I have a huge client out there and it's going to make me a lot of money, and they're requiring me to have a SOC report, I'm more than likely going to go out and get one of these SOC reports. I could be a smaller organization where, the organization is real keen on internal controls and protecting data and security and all that, and that might be the driver, where management or the governance of the organization is driving the need to have that report. And oftentimes, it's just basically table stakes to be in the game because your prospects or the people or the organizations which are your clients, they're all requiring it. So the answer is it depends, but there's many reasons. The biggest reason is because you have larger clients requesting it.
Tanya, before you ask the next question, I actually see one question on the screen that I think we would love to answer with regards to how would you respond to a vendor who doesn't think they need a SOC 2 because they use AWS and it's very secure. Falling short of saying I would start looking for a new vendor, I would have a sit-down conversation with that vendor and explain to them that AWS, in most cases, is providing the infrastructure, but not the actual service itself. So AWS has a SOC report over its infrastructure and can guarantee the security of the data that it hosts, but that guarantee extends only to the vendor that uses the service. At the end of the day, the vendor is providing you as an end user a service, and it is the vendor's responsibility to demonstrate that their internal controls are providing enough coverage from a access perspective, from a termination and an onboarding perspective, and a holistic perspective, that they're providing you enough security coverage that you would feel comfortable with. So it's really a difference between the types of expectations you have from your vendors. Mark, I know you might have something to add to that too.
No. Well, I was just one thing I was going to point out is the reports don't guarantee that the internal controls are operating effectively. It's reasonable assurance. So I think I used the word or term guarantee earlier. I should have said reasonable assurance.
Okay. Thank you. And we have one more, and we do have time for this while we have our audience complete our survey. So does the HITRUST and or cyber add time to the general timeline? And if so, how much typically?
Sure. So obviously we covered both of those at a very high level during this webinar. We could have done an extra hour just diving deeper into either one of those two. Those you can almost think of as a parallel process. A HITRUST, for instance, would go through a readiness assessment of its own and would go through essentially what constitutes a type 1 or a very similar concept with regards to a self-assessment. So you would self-assess whether you're ready to go get a certified validated report. And once you've crossed those bridges, that's when you actually pair it up with your existing SOC 2. So I almost encourage you to think of it as two separate processes till you've hit the maturity model that you need to hit for a type 2 SOC 2 type 2 report and a certified HITRUST report. Once you have hit the maturity required for both of those, then you can pair them together and have them issued concurrently and reduce the testing overhead and project management overhead associated with either or both. But really, it does almost have its own timeline, at least initially, before they merge into one contiguous effort. So hopefully that answers that.
Yeah. So thank you again. And if you have questions as you continue to receive requests for SOC reports or to provide to your customers for confidence around your controls, please contact Mark or Raveen as your resources. If you'd like a copy of today's materials, look for an email from us tomorrow where you can download the slides and watch or share the on-demand session of today's presentation. On behalf of Mark, Raveen, and myself, we'd like to thank you for spending this hour with us. Finally, if you met the requirements for CPE, you may now download your certificate. Thank you for joining us.
Thank you. Thanks.